ages, I've been telling you that the company formerly known as Newell Rubbermaid was one of the strongest stocks out there. And then the story just got much better when the company announced its acquisition of Jarden, that besieged more than 100 consumer brands in a deal designed to create a true consumer products and household goods powerhouse. Well, that merger closed a couple of weeks ago on April 15th, and last Friday, the newly created Newell Brands reported a spectacular quarter with terrific guidance, no doubt contributing to its top 5 performance in today's stock market. Let's check in with Michael Polk. He's the CEO of Newell Brands. Find out more about what's next for his company now that Jarden has officially been gobbled up and they're reporting excellent numbers. Mr. Polk, welcome back to Mad Money.
Hey,
good to see you, sir. Have a seat.
How are you?
Well, I tell you, you've got a very exciting aisle by aisle takeaway here, and I just wanted to give you the floor to say that how's the merger going? And it looks like that both companies had great quarters, but you're putting it together pretty quickly.
Yeah, we've hit the ground running.
Yeah.
In fact, I just came from a meeting of the top 100 of the company just on the other side of the river. And we're coming together, we're getting to know each other, and we're looking for all the opportunities we can tap to breathe the life into the upside of this combination.
But when I look at organic growth, which is how I measure the consumer products companies, I know you might say easy comparisons, but this was the best in the group.
We had a really strong first quarter. We're really proud of it. It's testimony to the progress we've made with our business, innovation-driven, brand support-driven, but 5.6% growth in this environment is a good outcome.
Well, let's talk about innovation. I mean, obviously, this is personalization, which is something that Jarden excelled in that I think you guys across the board now can do,
well,
right?
What we've said is we want to tap the capabilities, the best of both companies' capabilities. And Jarden brings a direct-to-consumer e-commerce capability that's really unparalleled. And at the heart of it is customization. So as you can see in this Yankee Candle jar that has your smiling face on it, that's something else.
But no, for Father's Day, this will be a knack.
It's an excellent, it's a great concept that they've got, which you can send in a picture of whatever you'd like to be featured on the jar, and it'll be customized in the way you'd like. So for weddings, for prom parties, exactly.
Fantastic. Now, cross-selling, acceleration, international deployment, leader at all categories. These are some of the points that you mentioned in the conference call, all coming together?
All of this is enabled by scale, and the combination gives us great scale with key strategic customers and key geographies with suppliers. And so through scale, you get the opportunity to cross-sell products, to accelerate your expansion of your geographic footprint, and also to take the capabilities that both companies have to offer and extend it across the total portfolio. And that's what we're on about doing.
There's parts of the portfolio that I think people don't realize are growing so quickly. I've got behind me Sharpie writing. International for this is going to be gigantic.
Yeah, I mean, the opportunity is really remarkable. It's a $21 billion category for the writing industry, and we've got the leading share position, but any branded competitors you'd look at, the total market adds up to only 36% of the market share. So there's 64% of the market to play for, and we start that from a leading position. So markets like China, which will eventually be the leading market in the world in writing instruments. By 2020, it'll be a $4 billion market. We enter into China this year with Papermate and with Sharpie, and we're excited about the prospects of consolidating share around the world.
Now, one of the things that I thought was interesting was that there are a lot of analysts questioning about culture, and it seemed like that the culture of Jarden, we know Martin Franklin for years, that culture of Jarden and the culture of Rubbermaid is not as far as we thought.
We have different business models, but the underlying culture of the organizations are very, very similar. It's a group of leaders that just want to sell things to consumers, build share every day, and get things done in the marketplace. So they're truly committed to executional excellence through our customers to reach consumers, and both companies have that operational grit.
But so, Michael, the synergies that you're talking about are much bigger than I thought was possible.
Well, I think the focus of our energy will be around growth, but an enabler to growth is to get the company as lean and as efficient as possible. And we have $500 million of synergies available to us through the combination, and we still have $300 million of savings to be delivered through Project Renewal on the Newell Rubbermaid legacy businesses.
Now, on Newell, it sounds like what you want to do, you said that you'll fix, but if it doesn't work, you will exit. It's not that you're not guaranteeing anything.
Our inclination is to get into these businesses and the ones that need work to do the profit intervention. And we were very successful doing that on our baby gear business, which is one of our fastest growing, most value-creating businesses we've got.
I talked to Uber this weekend. They're going to put them in, there's going to be special Uber line of these.
It's interesting, right?
Yeah.
And so there's all kinds of opportunity in the world and on baby gear. But if we had walked away from that business when we first got into this, it would have been a big mistake. Bad for shareholders. So our inclination is to get in and fix, and if we can't, then we'll find either a buyer for the business or we'll exit the business.
Well, this is the new consumer giant that I've been looking for. It needs some sort of housing and growth play, and you're giving it to us. Michael Polk, CEO of Newell Brands. That's what it's called now. Up very big today, but I don't think it's done. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.